afternoon. This is the stock that is about to break 850. More exactly stated, it might blow past 850. Is on watch. It's AMPX. This is what the chart looks like. Had a huge move the last couple of days. So it's not guaranteed to keep going. I think that's goes without saying, but it is good to say. And if you're like me and you use chat, this is the most important piece of the puzzle. Batteries, okay? Because if we know the sector, then we know what other tickers to look at. And as I'm just getting started here, I'm gonna put on some morning news.
Thank you for being here.
Let's see what Ariel has to say.
Congrats on
the swing trading god. Oh, you know what?
Good morning,
I do need
guys.
to make sure. Everything's copacetic here. I did see your comment about ONDS.
Good morning.
This is ONDS right now. And we did break. This is a better view of it. The 30-day. 6.5 is that level.
How was the news here?
So I was just responding to a comment on YouTube about Intel. Intel has been beaten down. This is about as compressed days as they come. So
yeah, ETHU looks, or
ETH
looks pretty nice. I was wanting to buy ETHU just over 156.
And I did see that comment about ONDS.
Would have done pretty well.
6.5.
So we're kind of at the level that I'm pretty interested in, but yeah, it looks good.
It is pushing up against 6.5. 6.5.
Yeah, MP is not bad. I already own it, and it rejected yesterday. Rejected the 10-day, so I'm hopeful that it can kind of hang in there and hold the 50-day.
But I did want to get those.
I think it looks good. I don't love yesterday's rejection, but if we can kind of get over that 10-day, I'll add to my position. But it's not really extended. This is just a nice little pullback into an ascending 50-day. Usually, once a stock starts a big run, the first test of the 50-day tends to be viable. Not every time, but
put them back.
I don't know if it reminds me of BE necessarily. Yeah, I mean, I guess a little bit, right? Like maybe somewhere in here. I like AOI in general. I could see this name much higher in time. METC Met Coal. A little sloppy here. Needs to find a spot to tighten up at. I don't really see it. Thanks, Brittany. Appreciate that. Yeah, I am. I'm bullish on Tesla mostly because of the technicals. I mean, it's just such a gorgeous weekly base. Normally, you don't get a mega cap with this kind of a absolutely perfect weekly base. And then obviously, they've got some things coming in the pipeline that could be very big for the market, right? Which is humanoids, robo taxis, things that may not be priced in yet. I don't know if they're priced in or not, but to me they look good. SNDK, what about it? SNDK with a question mark? What do you think about it? I know what it looks like, but what do you think about it? Was there news this morning?
Sorry, guys, we gotta take a break from the morning recap. Some of the questions are just elementary. So let's take a look at yesterday's recap.
Hey guys, it is September 11th, 2025, here with your after hours recap. Quick and easy today. I thought the market was acting fairly well. Obviously, you look at an Oracle on the big move yesterday, humongous pickup in volume, biggest of the entire trend, effectively going back, the entire move. There has not been volume bigger than that. Today, you broke yesterday's lows and also on a pickup in volume. To me, that probably signals that this thing is going to consolidate for weeks, potentially months, before possibly going higher. I'm hopeful to be wrong. I don't know what that means for your Irons, your Huts, your Ciphers, your Wolves. It did lead to a little bit of a pause in NVIDIA today. It led to some pause in AMD. And there's nothing wrong with that per se. These are names that have been fairly strong for a long time. And then today, obviously, money is rotating, and it is rotating into my favorite name, the biggest base. In the room, I've kind of been pounding on the table of me wanting to make this, my biggest position. And here we are. Huge day today. Really, really nice breakout. Really nice pickup in volume. Highest close since ends of May. I mean, just absolutely awesome. It would be kind of an expectation breaker for us to break today's lows. I'm kind of hopeful for higher. 400 plus is at least a start, and higher than that. Eventually the market hopefully will start to price in robo taxis. It'll start to price in humanoids. But yeah, it was just a absolutely awesome breakout today. My watch list was doing really well. You had a name like KTOS pushing higher today. BE continues to go absolutely vertical, which is awesome. Just this 1 o'clock look, and really even your CRDO 1 o'clock basically chart pattern, just awesome. But today a little bit of a down day, a little bit of digestion, nothing wrong with it. Probably a new base is necessary in a name like CRDO, in a name like A-Lab. I don't think that there's anything wrong with that. A-Lab is kind of just coming out of a consolidation here. So, could this one just kind of continue upticking? Yes. But there'd be nothing wrong with, for instance, an NVIDIA just continuing to chop around sideways for a little bit longer, clean up a little bit, and then, could we go higher here in a short amount of time? Yeah, I think it's totally possible. Again, I don't want to guess at what Oracle is going to do to the market, but effectively a bit of a pause, and I would imagine in some of these names it had to do a bit with Oracle. Got a little bit euphoric. The GDXU, or really we could just look at Nugget, just continues to act and break out beautifully. Just huge move here for the gold miners, led by none other than the biggest in the world, which is NEM. Just continues to act awesome. One of the S&P 500's biggest movers, and gold for the last few days really just digesting, not doing anything. And meanwhile, the gold miners just continuing to rock. So that is awesome. Money still flowing there. The healthcare names, UNH definitely feels like it has bottomed. I don't see myself trying to get myself involved into this thing, but it is still continuously pushing higher. Won't be too surprised if we're at $400 on this thing fairly soon. And then, what will it do when it finally gets back above the 200 is yet to be seen. But ultimately, I thought the market, was just a bit of a pause. The NASDAQ held in there pretty well. Semiconductors, for the most part, taking a little bit of a breather today. I don't see anything wrong with that. These memory names like SNDK, they're starting to get a little bit wild. WDC, another one, a little bit wild. MU, a little bit wild. STX, again, a little bit wild. But they're in the right group. They're all in a group together, and they just continue to rock higher, and that's awesome. Even in here, I thought maybe this needed a little bit more digestion after the move it had already given. I was like, it's a little sloppy. I don't know that this thing's really going to go higher. And sure enough, kind of beat my expectations. But great to see. There's definitely names in really, really healthy uptrends. TEM was one that was a absolute monster today. Awesome to see. Huge pickup in volume. Congratulations to those of you guys sitting in TEM. And I did go ahead and buy some Oklo today. I think this was just a beautiful little downtrend line break. Usually don't go for downtrend line breaks too much, but I did just buy it when we took out yesterday's highs, not necessarily the downtrend line. And it's acting beautiful from there. Hopefully a bit of follow through. I also still own MP for the last few days, and we did just reject at the 10-day. I'm hopeful we can perk back up tomorrow. Otherwise, I'm not going to sit in something that's not acting great. I want my stocks going up. I don't want them going sideways. I really want them going up. CCL, I still own this one, going back for the last few months now, almost 3 months, and this thing did just make a new 52-week high. Awesome move for CCL. PDD is lagging, unfortunately. It is lagging BABA. I wanted to get myself involved into BABA, but it was just a tad sloppy down here. This thing did a $3 billion offering yesterday. Got bought right back up. $3 billion is peanuts for a name of this size. And, we are just breaking what looks to be a 3.5-year base. Looks to be going higher. Just look at all the accumulation here on the weekly, all of the biggest green bars, and I mean all of them are green bars, signaling accumulation for the last handful of years, going back to early of 2022, and here you go. You are now pushing out higher. Congratulations to the BABA holders. I wanted to get involved in this thing. Couldn't quite find a spot before earnings. Should have took it a little bit more seriously last Friday. Instead, I've been sitting in PDD, acting a little bit like a laggard, but I'm going to continue to hold PDD so long as we just continue to trend up this 20-day. I've got no issues with it. And ARC, just absolutely gorgeous. I added to this one 2 days ago. Yesterday, tried to shake me out, couldn't quite do so. And then today, right back to life on a pickup in volume. Really nice flat base breakout setting up again, except this is an even bigger base than before. Kind of looks like it's prepped and ready to go higher. Obviously, Tesla is one of ARC's biggest holdings. So if Tesla continues to push higher, Palantir doesn't die, Hood doesn't die, I would have expectations for ARC making a new high here and pushing, $85-$90. I mean, you look at this weekly, looks absolutely awesome. Just a really nice weekly, and it kind of looks like it's also primed for higher. So hopeful that in the next few weeks we can maybe be seeing $100, and that would be a nice into the end of year kind of rally. But we'll see. No real expectations. I'm just here to manage risk in real time. But I have done a much better job getting myself repositioned on the long side. I still have ARC and added. I still own CCL. I've got PDD. I've got a pretty, not huge position, but sizable in Tesla. I definitely want more shares in Tesla. So any pullbacks on 60 minutes time frame, finding some support, I will be there to buy a few more shares at a time. CCJ is a new one and acting well. MP is a new one acting well. Oklo just added today and acting well. So Definitely much more exposure put on lately, and hopefully it continues to work. Market to me seems fine. There are some names that I could see myself buying more of over the coming days if we can break out in something like Uber. It's a little bit sloppy still, but it is shaping up fairly well. We're just looking for an all-time high breakout, basically $98. That looks pretty interesting. Shopify's another one that looks fairly interesting. TEM if it sets up properly, IREN if it sets up properly in time. I've kind of missed my spot on that one. AAOI is one that I'll be watching here going forward. Trying to get positioned in that one. Reddit as well is one that I will be trying to get positioned in going forward. Again, you can't kiss all the girls. You just take the ones that come into your wheelhouse and set up properly. The important part is making sure that you have your eyes on the stocks that actually are going up, and then they'll tighten for you. And then, they will continue higher if the market stays healthy. So there's a lot going on. Also, Ethereum, we should just take a peek at that one. This thing continues to tighten up and just go sideways and do really nothing for the last 10 days. And I don't think that that's a bad thing at all. It's made a nice move up, and now we're just tightening up and going sideways. If we can crack this range effectively over today's highs, I would be a buyer of something like ETHU. And if Bitcoin wants to get its act together, I would be a buyer of something like IBIT or potentially even BitX. So there's a ton of merchandise out there. And if the market's really going to have some legs, you're going to still be able to get on tons of exposure. So, don't force it. Let the market kind of pull you in. I hadn't even really seen how this one was acting, but it is just tightening. There is still a bunch of merchandise, like I said, out there. And if the market is going to give us into a nice end of year rally, you still have plenty of time to get some exposure on. But that's really it from my perspective. I didn't see anything today that kind of jumped out off my screen, with the exception of Tesla. And we'll continue to try to make that a silly size position. I do have a very sizable position in there now, but we want to make it bigger. Just based on the weekly chart on that thing alone. And, my opinion that the market still has to price in some robo-taxis and some humanoids. Again, that's just my opinion. I'm really just basing this on technicals. It looks fantastic. It acted great today. We'll just continue to take it one day at a time. Hopefully you guys all had a great trading day, and I look forward to seeing you guys bright and early for pre-market prep or in the room near the open. Cheers, guys.
Okay, let's get a little replay on this.
Hey guys, it is September 11th, 2025, here with your after hours recap. Quick and easy today. I thought the market was acting fairly well. Obviously, you look at an Oracle on the big move yesterday, humongous pickup in volume, biggest of the entire trend, effectively going back, the entire move. There has not been volume bigger than that. Today, you broke yesterday's lows and also on a pickup in volume. To me, that probably signals that this thing is going to consolidate for weeks, potentially months, before possibly going higher. I'm hopeful to be wrong. I don't know what that means for your IRENs, your HUTs, your Ciphers, your Wolves. It did lead to a little bit of a pause in NVIDIA today. It led to some pause in AMD. And there's nothing wrong with that per se. These are names that have been fairly strong for a long time. And then today, obviously, money is rotating, and it is rotating into my favorite name, the biggest base. In the room, I've kind of been pounding on the table of me wanting to make this, my biggest position. And here we are. Huge day today. Really, really nice breakout. Really nice pickup in volume. Highest close since ends of May. I mean, just absolutely awesome. It would be kind of an expectation breaker for us to break today's lows. I'm kind of hopeful for higher. 400 plus is at least a start. And higher than that, eventually the market hopefully will start to price in robo-taxis. It'll start to price in humanoids. But it was just a absolutely awesome breakout today. My watch list was doing really well. You had a name like KTOS pushing higher today. BE continues to go absolutely vertical, which is awesome. Just this 1 o'clock look, and really even your CRDO 1 o'clock basically chart pattern, just awesome. But today a little bit of a down day, a little bit of digestion, nothing wrong with it. Probably a new base is necessary in a name like CRDO, in a name like ALAB. I don't think that there's anything wrong with that. ALAB is kind of just coming out of a consolidation here. So, could this one just kind of continue upticking? Yes. But there'd be nothing wrong with, for instance, an NVIDIA just continuing to chop around sideways for a little bit longer, clean up a little bit, and then, could we go higher here in a short amount of time? Yeah, I think it's totally possible. Again, I don't want to guess at what Oracle is going to do to the market, but effectively a bit of a pause, and I would imagine in some of these names it had to do a bit with Oracle, got a little bit euphoric. The GDXU, or really we could just look at Nugget, just continues to act and break out beautifully. Just huge move here for the gold miners, led by none other than the biggest in the world, which is NEM. Just continues to act awesome. One of the S&P 500's biggest movers, and gold for the last few days really just digesting, not doing anything. And meanwhile, the gold miners just continuing to rock. So that is awesome. Money still flowing there. The healthcare names, UNH definitely feels like it has bottomed. I don't see myself trying to get myself involved into this thing, but it is still continuously pushing higher. Won't be too surprised if we're at $400 on this thing fairly soon. And then, what will it do when it finally gets back above the 200 is yet to be seen. But ultimately, I thought the market, was just a bit of a pause. The NASDAQ held in there pretty well. Semiconductors, for the most part, taking a little bit of a breather today. I don't see anything wrong with that. These memory names like SNDK, they're starting to get a little bit wild. WDC, another one, a little bit wild. MU, a little bit wild. STX, again, a little bit wild. But they're in the right group. They're all in a group together, and they just continue to rock higher, and that's awesome. Even in here, I thought maybe this needed a little bit more digestion after the move it had already given. I was like, it's a little sloppy. I don't know that this thing's really going to go higher. And sure enough, kind of beat my expectations. But great to see. There's definitely names in really, really healthy uptrends. TEM was one that was a absolute monster today. Awesome to see. Huge pickup in volume. Congratulations to those of you guys sitting in TEM. And I did go ahead and buy some Oklo today. I think this was just a beautiful little downtrend line break. Usually don't go for downtrend line breaks too much, but I did just buy it when we took out yesterday's highs, not necessarily the downtrend line. And it's acting beautiful from there. Hopefully a bit of follow through. I also still own MP for the last few days, and we did just reject at the 10-day. I'm hopeful we can perk back up tomorrow. Otherwise, I'm not going to sit in something that's not acting great. I want my stocks going up. I don't want them going sideways. I really want them going up. CCL, I still own this one, going back for the last few months now, almost 3 months, and this thing did just make a new 52-week high. Awesome move for CCL. PDD is lagging, unfortunately. It is lagging BABA. I wanted to get myself involved into BABA, but it was just a tad sloppy down here. This thing did a $3 billion offering yesterday. Got bought right back up. $3 billion is peanuts for a name of this size. And, we are just breaking what looks to be a 3.5-year base. Looks to be going higher. Just look at all the accumulation here on the weekly. All of the biggest green bars, and I mean all of them are green bars, signaling accumulation for the last handful of years, going back to early of 2022. And here you go. You are now pushing out higher. Congratulations to the BABA holders. I wanted to get involved in this thing. Couldn't quite find a spot before earnings. Should have took it a little bit more seriously last Friday. Instead, I've been sitting in PDD, acting a little bit like a laggard, but I'm going to continue to hold PDD so long as we just continue to trend up this 20-day. I've got no issues with it.
Guys, if you're
And
just
ARC,
joining us, we're
just
listening
absolutely
to
gorgeous. I added to
Ariel,
this one
Real
2
Simple
days ago.
Ariel.
Yesterday tried to shake me out, couldn't quite do so, and then today right back to life on a pickup in volume. Really nice flat base breakout setting up again, except this is an even bigger base than before. Kind of looks like it's prepped and ready to go higher. Obviously, Tesla is one of ARC's biggest holdings, so if Tesla continues to push higher, Palantir doesn't die, Hood doesn't die, I would have expectations for ARC making a new high here. And pushing, 85, 90 bucks. I mean, you look at this weekly, looks absolutely awesome. Just a really nice weekly. And it kind of looks like it's also primed for higher. So hopeful that in the next few weeks, we can maybe be seeing $100, and that would be a nice into the end of year kind of rally. But we'll see, no real expectations. I'm just here to manage risk in real time. But I have done a much better job getting myself repositioned on the long side. I still have ARC and added. I still own CCL. I've got PDD. I've got a pretty, not huge position, but, sizable in Tesla. I definitely want more shares in Tesla. So, any pullbacks on 60 minutes time frame, finding some support, I will be there to buy a few more shares at a time. CCJ is a new one and acting well. MP is a new one acting well. Oklo just added today and acting well. So definitely much more exposure put on lately, and hopefully it continues to work. Market to me seems fine. There are some names that I could see myself buying more of over the coming days if we can break out in something like Uber. It's a little bit sloppy still, but it is shaping up fairly well. We're just looking for an all-time high breakout, basically 98 bucks. That looks pretty interesting. Shopify's another one that looks fairly interesting. TEM if it sets up properly, IREN if it sets up properly in time. I've kind of missed my spot on that one. AAOI is one that I'll be watching here going forward. Trying to get positioned in that one. Reddit as well is one that I will be trying to get positioned in going forward. Again, you can't kiss all the girls. You just take the ones that come into your wheelhouse and set up properly. The important part, it's one that I will be trying, and if it sets up properly, that EM time be watching well is one that I will be trying to get positioned in going forward. Again, you can't kiss all the girls. You just take the ones that come into your wheelhouse and set up properly. The important part is making sure that you have your eyes on the stocks that actually are going up, and then they'll tighten for you. And then, they will continue higher if the market stays healthy. So there's a lot going on. Also, Ethereum, we should just take a peek at that one. This thing continues to tighten up and just go sideways and do really nothing for the last 10 days. And I don't think that that's a bad thing at all. It's made a nice move up, and now we're just tightening up and going sideways. If we can crack this range effectively over today's highs, I would be a buyer of something like ETHU. And if Bitcoin wants to get its act together, I would be a buyer of something like IBIT or potentially even BitX. So there's a ton of merchandise out there. And if the market's really going to have some legs, you're going to still be able to get on tons of exposure. So, don't force it. Let the market kind of pull you in. I hadn't even really seen how this one was acting, but it is just tightening. There is still a bunch of merchandise, like I said, out there. And if the market is going to give us into a, nice end of year rally, you still have plenty of time to get some exposure on. But that's really it from my perspective. I didn't see anything today that kind of, jumped out off my screen with the exception of Tesla. And we'll continue to try to make that a silly size position. I do have a very sizable position in there now, but we want to make it bigger, just based on the weekly chart on that thing alone. And, my opinion that the market still has to price in some robo-taxis and some humanoids. Again, that's just my opinion. I'm really just basing this on technicals. It looks fantastic. It acted great today. We'll just continue to take it one day at a time. Hopefully you guys all had a great trading day, and I look forward to seeing you guys bright and early for pre-market prep or in the room near the open. Cheers, guys. Opinion. I'm really just basing this on technicals. It looks fantastic.
Okay. Now, typically I would see what's up this morning as well, but I have a feeling this is really gonna upset people if I play this at 3x speed. But I guess we'll just see what happens and watch the viewership dwindle.
Come on, guys. Good morning. How was news here? Yeah, ETHU looks pretty nice. I was wanting to buy ETHU just over 156, even 153 would have done pretty well, 154. So we're kind of at the level that I'm pretty interested in, but that looks good. Yeah, MP's not bad. I already own it, and it rejected yesterday, rejected the 10 day, so I'm hopefully I can kind of hang in there and hold the 50 day. I think it looks good. I don't love yesterday's rejection, but if we can kind of get over that 10 day, I'll add my position. But it's not really extended. This is just a nice little pullback into an ascending 50 day. Usually, once the stock starts to big run the first test of it, it tends to be viable. Not every time, but I don't know if it reminds me of BE necessarily. Yeah, I mean, I guess a little bit, right? Like maybe somewhere in here. I like AOI in general. I have to see this name much higher in time. METC, Metcoal. A little sloppy here. Needs to find a spot to tighten up. I don't really see it. Thanks, Brittany. Appreciate that. Yeah, I'm bullish on Tesla mostly because of the technicals. I mean, it's just such a gorgeous weekly base. Normally, you don't get many cap with this kind of absolutely perfect weekly base. And then obviously, they've got some things coming in the pipeline that could be very big for the market, right? Which is cumulative robotaxis, things that may not be priced in. I don't know if they're priced in or not, but to me, they look good. SNDK, what about it? SNDK with a question mark? What do you think about it? I know what it looks like, but what do you think about it? How was the news this morning? I don't know. I don't know how I feel about it. Not enough, I want it to be like 30 or 40%, but that's gonna take a couple more buys to get out there. Coin looking interesting. No, not while it's below the 50 day. It looks better, right? I like this little base size build, but it's gonna have to get going over the 50 day. Ideally, at some point, this thing can kind of get moving and it'll be back over the 50 day. So 342. Z-scaler, yeah, better. Did I look at SoFi on the monthly chart?
Watching, so I'll just crank it up all the way
SoFi on
to
the
how
monthly
I would
chart does not look like
actually
Tesla weekly. Not even a little bit. So here's SoFi's monthly. Okay, that not sure how you extrapolate that looks like this. What do I think of crowd? It's a little bit slower. These names in cybersecurity haven't been acting all that great. If this thing can reclaim 50 day, then maybe we're talking. JE, it's a ladder. Like, okay, maybe in time it goes higher, but why would you prefer a name that's still below 200 day versus a name that just broke out of a 3.5 year range? Right? You're gonna have to make your logic make sense to me. Do you know something about JD that the rest of the world doesn't know? Because apparently the powers that be, which are institutions who can move your stock, don't give nearly as much of a shit about JD as they do about Baba. And you're still looking at charts below the 200 on the weekly. And apparently you like this name more than this one. You gotta make that make sense. Right? And you might say, oh, well, Baba's a little extended, so I'm going for the ladder. It's got some catching up to do. That's what everybody says, by the way. And that's why everybody ends up with shitty underperformance. That's why I'm telling you the majority of people end up underperforming. Because they look to play the catch up name versus look to be in the leader. You want to be riding the horse that wins the Kentucky Derby, or you want to be riding the horse that wins the Oklahoma Classic? I mean, you tell me. Is it too late to get into Tesla? We haven't even really broken out yet. I mean, we just are at this last peak, which is 567.71. We haven't even really broken out yet. So do I think it's too late to get into Tesla? No. Maybe pullbacks into Rise 16 and support are pretty good. Something around 360 could be pretty interesting. If we get a little morning flush or a little deeper, who knows? Yeah. So if you're already in Bob, you're trying to add a JD as a catch trade for what? Right? You already own the best. Own the best. Leave the rest. Own the best. In all the lead groups. Or find a way to plow more into the name acting best. Are you gonna put your money out there and underperform? Don't do that to yourself. Bob is better. Futu's better. Futu's better than Bob, and then TME. Obviously, as of late, Bob's been acting awesome. And then PD would be next in line. And then maybe someday aspect. Already an established uptrend. See this 200 day established in an uptrend already. But JD, Jesus, why is the 200 still down sloping? What is going on here? Yeah, even Bobby's back above the 200 in a big way, and also a really big base too. And on the weekly, just creeping up to the 200 now. But Futu on the weekly, and it's well established uptrend. Probably goes into seasonal time here pretty soon. And Baba, huge weekly base. And I pointed out all these volume bars. See them? Tell me what all the biggest volume bars in the weekly are doing. They're all bright green. There's been accumulation in this thing. This entire base. It's likely Baba ends up going much higher. It's not Baba. So what about it? Are you just asking for my opinion? I don't like it here. I like a better flat base, although it could very well get going over this little base here. By pullbacks against the 70 daily moving averages. Tree is like Lending Tree or something? Or is that LC? Oh, it's Lending Tree. Yeah, not bad. It was better right there. Don't really see a setup for tree here. I1Q. Yeah, I1Q was about a handful of days ago, right there. 42.5. Whoever trades stock when it's greater than 4 times damage range from the 50, yes, earnings gap ups. It's about the only exception. Neo just did an offering. I prefer SPAC too, but yeah, I mean, really nice job bouncing back. Offering and then you bounce right back. Yeah, it's not that bad. I don't know if that was manipulation. There was like a short report against it, if I'm not, or something like that. I'm not sure. But this isn't that on top, dude. You can do this kind of stuff all the time, and then you bounce right back and go higher. Tesla matching price action on the daily? No, not really. Kind of looks like a little flat pivot that just broke out of a flat base. Rocket Lab. I think it's a clear 51. How is SI? Silvergate? Are they, it's like the old Silvergate? I don't know. There's nothing here. Oh, Silvergate, it's a silver miner. My favorite silver miner is Hecla. But if you don't already own it, you're late to the party. This is the United States' largest silver miner. Do I ever buy consolidation and breakout or anticipation of a range breakout? I do, but I buy pullbacks to ascending moving averages within the range. about the only way I can get involved in them. Like obviously, I try to not really buy pullbacks or breakouts, but prior to highs within range. APLD, yeah, this thing's been acting really well. I don't see a spot for it though here. Big base on this NTRA. Yeah, we'll see if we can get going there. I don't know that I love it here just yet. Short on production rate for Boeing. Yeah, just broke the 50. That's never a great sign. But unless you shorted it yesterday, I don't really see a spot to short it here. I'll break the prior low maybe. But yeah, I don't really see a spot to short it. I didn't add more MP. No. In fact, I got stopped out of a few on Wednesday, and then I held it yesterday, and I was feeling pretty good about it, and then rejected the 10 day. I just left it alone. I stopped at 61.5. Hey, MSC, does that get better name? Yeah, it looks pretty good. I thought it was a decent little bull flag coming into the 50 day. I still think it looks good. Yeah, ETH is nice too. ETHG was the one I was focused on. And then Bitcoin getting in there, I bid over the next. It was perfect. The day I was trying to, well, not trying to buy, but I was looking at this day instead of with CCJ. Should have bought LU as well. Do I track portfolio ATR in relation to market cycle? No, so you're saying I take the cumulative of my portfolios, effectively average percentage range, and then kind of, no, I don't do that. I just give every chance, like every stock I check, because here's the thing. Okay, if I were to track my portfolio's ATR in relation to the market cycle, I'm not trading much in NASDAQ stocks. What if like you were in gold names? Right? What market do you compare to? Or are you saying track your group's ATR extension from the 50 or portfolio's ATR and compare it to the group that it's in or the market that trades in? So like if I got gold names compared to gold, if I got tech names compared to the QQQ, if I got home builders compared to maybe the XAP or the S&P 500, that's just too much work, man. I mean, maybe it would be fruitful for me to look at that, but I don't know. Like I don't know, crazy is maybe I'm lazy at this point, but I don't like to do anything to change up what I know that's been working for me for years. You ever heard the phrase like if it ain't broke, don't fix it? Although that is probably a little lazy because I could probably make some improvement somewhere. But it's just like I know what works for my personality. I know what's been working for me for years. Like just don't change it, right? Just the only real thing that I think I can improve on is my situational awareness. But that's about it. You know, but yeah, I mean, maybe it's a good exercise. Maybe I'll look at that someday. Honestly, that's not a bad suggestion. Figures is something I'm interested in. Meaning I feel like I have the colonoscopy. Why would I be interested in this? Where's the momentum? Like this green day here looks a lot like this green day here or here, and then just continue to go lower, or even here. Like I don't get excited. Where's the momentum? I don't really love trading new IPOs. They're not enough price history. I saw firm pulling back yesterday. Yeah, I don't know. You know the problem with the firm pulling back yesterday is that the market was acting really well. That's my only real slight hiccup. Like, otherwise, it still looks fine. If it comes from 20 or you come a little bit lower to the 50, then you know those two 50 spots are like right here maybe today. If it starts to turn up, could be interesting. Just using yesterday's lows as a stop. TPC is more like a short base on the big red bar. No, I don't think so. This big red bar was also a green day. Just because you see a big red bar is a gap up on earnings. It just closed lower than where it opened. And now it's almost right back up to that high. I mean, I don't know that for sure.
Alright guys, I'm reminded why I don't listen to these.
Too slow. It was 2.3% per day. You don't need to slow in your portfolio. This one also was only 2.5% per day. You don't need to slow in your portfolio. But yeah, it had a decent little flat base. It's just too slow. Cleveland Cliffs, steel names aren't that great as a group. They just don't act well enough yet. I don't know. Doesn't look horrible, but you know, let the 200 day actually turn up. Do I like FLR? This looks like a short. Or SMR. I'm not sure how that's like an and or kind of question. They both look like shorts to me, even though I don't know what goes along. Actually, team, what I said was you can't kiss all the girls, not all the babies. But yeah, you can't them all. You know, you have to like come into the day every day with a more narrow focus. Right? Like during the day when the market's open, you know, can you find a few names that are going higher, that are working? You know, that's all fine. During the day, you know, new stocks that are getting love. But at night, when you do your homework, you have to have an idea of what you want to look after the following day. Like my watch list has been set. Right? That's you know, it makes my job a whole lot easier when I come sit down here with you guys. That's how it's been for me. I do my watch list the night before, so I'm not scrambling the morning of. Or look at all those good, at night, I can literally just sit here, you know, I make my old fashioned, I'll just sit down, relax, scan through the market nice and calm, everything's closed, only the future market's open, and I can figure out where the hell I want to be for the next morning. TL's an interesting one. They did an offering, and they got bought right back up. I'm pretty sure they did an offering here, and they got bought right back up. This is a sign of big time strength. So you can find a way to get into this one, figure out a way to get into that one. Circle nice move yesterday, I saw that, but you know, it's gonna need a little bit more life. Yeah, grab nice, they're like the everything stock, yeah, they do everything top Southeast Asia. Yeah, this thing is awesome. Base looks great. Was viable a few days ago. Looks like trying to go much higher. You know, I thought team was just a little sloppy here, riding the 20, but you know, good, holding the 20. So I don't know. I didn't really see an entry personally, but it does look like it's going to go higher. Yeah, see, what's up, brother? Nice to have you here, man. Thank you for being here. Congrats on the support all the time. What swings am I in now? I'm in ARC, and I bought this thing at 59 bucks on 6.6. I just added a few days ago on 9.9, and I almost got stopped out of those ads this day, but not quite. And then yesterday it rips, and now it's got a gorgeous flat base. I'm in ARC. I'm in CCL. I've been in this one since the high volume closed out about 6.26, so almost 3 months as well. And yesterday I just saw a new 52 week high, so that's always nice. I'm in PED from 122.5 when it found support at the rising 20 and it took up higher to high. Pretty simple setup. I'm in Tesla. I bought this thing last Friday, I believe it was. Last Friday, and I added a few days ago on a little bounce down here. And I own CCJ from a handful of days ago on this day here, 99, and I had a little bit of a wider stop, and it's just working hardly. Should have bought LU instead. I own MP from a few days ago as well, about 63.5 bucks, kind of where we're at now. Was using Friday low, really the 50 simple as my stop, and Opendoor I bought yesterday. Fairly straightforward portfolio. Wish I owned more names for sure, but you know, just the way it is. It was pretty choppy for me in July, August. DraftKings I thought yesterday was pretty interesting against the 50 day. Yeah, I talked about this one yesterday in the room I was having. Just pull back to the 50 day and look for a 620 setup down here. So you know, something like right in here could have been interesting. Right in there. With a shot at low day, right? By 90 cents of risk. Thoughts on Sedge, FSLR, I like FSLR more. But I don't know that I love them. How to hold ARC? Well, my ads weren't you know, really in any danger. And I was just widening out my stop a little bit. Again, how do you hold something? Well, before I got in, I knew where I wanted to stop. And so because I was widening that stop, right, I was actually using 9.5 low, right? So the low there was 73.65. So just because I bought it, the prior day was this like little gray bar, effectively no range at all. Open, close where it opened. So I was using prior day low. So I sized into this candle here, right? With enough size to hold it down to 73.65. The next day it didn't get close to that at all. So I just held my position because I knew what my stop was. Right? I'm not worried about one little bar ever, right? It's like I sized according to what my stop was going to be. And you know, just hold it patiently, and here we are, right? Almost at a new 52 week high. And it looks great. I mean, this is a beautiful flat base. Oh, nice. Yeah, Tesla is acting fantastic. You know, I've kind of the opinion that you know, the bull market doesn't end without, you know, Tesla finally making a pretty big move. I could be wrong, but you know, at this point, I really won't be a red trade. Serve? Yeah, Serve fine. I kind of like SYM a little bit more. But yeah. Well, I would be looking for any kind of pullback to Tesla. I would be comfortable to add some more. You know, it's kind of a trade where it can make, you know, it can make your year, right? It can make your year, it can make next year. Yeah, Shopify, I like this one too, but we talked about this one yesterday in the room as well. Very nice name. I don't think it's doing anything wrong. It's got a nice little flat base forming to me, just right here. Yeah, Shopify looks great. Love the gap up earnings, hasn't really done anything wrong. Building a series of higher lows, and you know, just kind of got to get over that flat pivot. Yeah, Oscar, I mean, nice job holding on to the 200 for this thing. If it could just flatten out price at some point or build a better high flag, I would be interested in trading a name like this. Big base, man, big base. I remember when this thing was here, I thought it looked great. Right there, look, just perfect. No, I think ARC is at a pivot. If the market's going to be pushing, I think this beautiful base could be a whole new buy. Why do I like Tesla so much? Just because of the potential. I know particularly I view them as a car company. I view them as a software stock. I view them as a, you know, they're like, you want to be innovator. And the board is giving a massive incentive to, you know, basically put all this effort into Tesla and become the world's first trillionaire. So, you know, if I were Elon, I would probably make sure that, you know, my promises came true too. So, and robotaxi is already a thing. Robotaxi is already a thing. So we'll see. I mean, again, you see, like, how much damage has been thrown this company's way from his breakup with Trump publicly, next to the public spats, the dealership being burned down, the car being vandalized, the new political party being started. All the while, the stock continues to build higher lows. Every time the stock comes down, it refuses to go lower. That's buyers willing to step up and pay a higher price every time. They're not waiting for some ugly correction on the thing. They're anxiously stepping up to buy more. Myself included, because of what I'm seeing on the chart. And then you start to say to yourself, okay, I saw that drive that they did, and they compared it to an Uber cab, where it was like $2.40 for the robo taxi, and it was like $12 for the Uber. I don't know about you, but that's a pretty big deal. Friends of mine who own Teslas, in particular, the new ones, tell me how absolutely awesome full self driving is. Now, I haven't done it, but I've heard nothing but awesome things, and my plan is to go try it this weekend, just to know for myself. So, you kind of take into account this technology that they have. Apparently, is awesome. They're a data collection company. They're a software company. They're potentially a future robot company with one of the best manufacturing capabilities in the world because of their auto plants that they just retool for building robots. I mean, there's a lot of potential there, and the market does it. Like the price you see right now is like if you're focusing on today's sales, today's numbers, today's this, today's news, and prices going up, and you're arguing with price because of what is going on today, you end up missing what the market is pricing in, which is the future. Right? Markets like to price in the future. Institutions say to themselves, they're going to build robots. Let's buy that today, so we can get ahead of the people who will buy this company when they finally start building and manufacturing robots. At that point, the minute they sell one robot, the stock price is already priced it in. So you guys just try to remember that. Right? The stock market's forward looking. How forward looking? I have no idea. But technicals look great. The weekly looks great. There's a story there, and we're in a bull market. That's it. I don't give a shit about anything else. First and foremost, we are in a bull market.
Open coming back.
Secondly, this thing's got gorgeous technicals. I mean, just absolutely picture perfect. Really can ask for a lot more. And then the most important part, I'm already bright green on my trade. The worst that can happen is I get back on realized gains. I don't give a shit about unrealized gains. I only care about money that I've locked up already on other trades. My realized gains, this is my actual portfolio. Unrealized gains. All I'm doing is swinging for the fences. And really, I'm not even swinging for the fences. I'm just taking a swing with more money on the line. But at this point, it's a right green trade already, and it can only either end up being a home run or a single. Right? I mean, at this point, it's like I even strike out because the worst case scenario is it just goes back to my average and I cut it. That's it. So hopefully that explanation makes sense. And yes, I got massive conviction that it goes a whole lot higher. And I could be wrong. I'm okay to be wrong. I also made plenty of money on this run up here. And I bought it on this day here. I also made plenty of money on just this little bit higher from here to here. Right, so I've already traded Tesla. Fantastic. Remember, the market always prices in the future way too thin, brother. LSRX is fine from a tactical perspective. You don't really want to trade stocks at one. Do this on the daily. You ask yourself, what the fuck is this? Like, what the hell is that kind of price action? Right? There's just no volume there. Right? It only trades $2 million a day. You want to avoid stuff like that. That's another one that's just a little bit, but yeah, not bad. Really nice move on earnings and then just sideways to digest. Looks good. Looks good. I'll have to get back to you on this one. Ask me again down the road, and we'll see if I can come up with something. I don't really know what metrics I use to track my profit factor. I used to track my profit factor. I used to track my win rate when I was a day trader, but none of that matters to me. My win rate's like 30%
Low priced.
What do I think about? Yes, I also did enough for me to get back up. Not really clean setup. I thought it was nicer right there. A little sloppy here, but it's fine. Oakland's definitely a little tomorrow. Yeah, you need the guy including the S&P 500. Yeah, this is a nice base. We'll see if we can get going. I saw RCAT yesterday. Yeah, a drone name. Not bad. I prefer ATOS for drones. Too thin. $12 million. Man, you guys need to stop looking at these super cheese, man. $12 million traded on the day, just not enough. Yeah, be easy to move. I was watching this thing down here. Right through here. Dave? Yeah, nice job getting back over the 50. Doesn't look bad. I don't think it's too extended at all. It's done a really nice job pulling back. A base that hasn't fallen apart, might I add. Would I consider buying Carvana? Yeah, we have to get going. I've had this level here just waiting for it to trigger, and it really hasn't. Will I find a way to open? No. Like, wait, you know the setup I open was down here, right? Guys, I do not suffer from FOMO. I could give a shit less. If this thing were to build a new base and tighten up, then yeah, maybe I would find a way to open it. But I'm gonna find a way to open up here. I'm not gonna get this thing in 3 days. It's up 250% from the fucking 50 days. It's up like 12 times its average range from the 50. I think I've seen you guys set a couple times. I don't know. I don't know what group is it, but it's an enough trend. TW Tidewater. The trend that a bunch of these energy stocks are kind of starting to turn. What do I think of course? I think it's good that Corey's not buying them. Yeah, not bad. I like Hot Wolf, Iron, Cypher, interacting great. Yeah, and there's a new high. Hot Wolf. Yeah, not bad. Yeah, it kind of falls into that same theme. Yeah, Soxo, early SMH, usually SMH. Yeah, SMH already got a new high. Looks a little like Nasdaq. I think it's possible that Tesla can, I don't know, by the end of this week. That would be $30 move today, so yeah, I think you're a little crazy, Mike. Maybe next week. Yeah, USD's fine. It seems to keep finding support near this rising 20, which it did again yesterday. I mean, it looks good. I don't love it. I don't hate it. Any reason I didn't enter? Yeah, I'm not a fan of meme stocks. I mean, obviously in hindsight, I should have, but what's your take profit strategy? I like to trim 1/3 and 1/2 in a 3-5 day push, and then just trail the rest on these moving averages. Yeah, I went to Reddit, GBT, GBTS, they're just not dying. What ADR do I look for? At least I trade things that are a little bit slower. I kind of have to expand my universe of stocks. But if you're trading like, anything sub like, I don't know, $1 million account, you probably stick to names that are, 4 ADR higher. Toast Rose, XPL over. Yeah, I don't know about the XPL or ADR, but the other 3. Rose, I don't really like the action the other day, but stick to now. Toast also needs to find support at the rising 200. The issue with Rose and Toast, they're other parts, like restaurant stocks, are just kind of dying. Right? Like, look around at restaurant stocks, they look bad, man. Yeah, I agree. If ARK's gonna go higher, like we got on the back of Tesla. Yeah, I'm kind of just looking for ARK to be over yesterday. Size was doing so. I think we'll wait a few minutes and then maybe find it opening. Right? You want a Tesla FSD is great. See what I'm saying? There's another person. You try to FSD super tables and same good. Yeah, TW's not bad. TW, I mean, the sector's turning around. There's a lot of stocks within that group. My favorite is like Dino. This thing's been acting well for a while. I got above the 200, consolidated really cleanly, and then kept going. Yeah, Rocket Lab over 51. I thought Google was better lower. If you like it up here as a long-term hold, fine, but I thought it was better down here. Yeah, Corby, I mean, I'd like to see it tighten up some. Right? Like, how do we know that this little move higher doesn't end up like this little move higher where it fails? You need to tighten up. You gotta be at 52, good lord. Chase it up just a little bit, didn't you? Luckily, one of the strongest stocks in the market. Yeah, I think ETH should be pretty good. LU and Opendoor are definitely leaders, but let's not forget about CCJ. Right, CCJ has done nothing wrong. In fact, you call LU a leader more than CCJ. I mean, CCJ is at a 52-week closing high. LU is not. Right, CCJ, where it closed yesterday or even the day before, is in fact a 52-week closing high, basically. Right, so one is actually the better leader, which is why I bought CCJ. I thought it was going to push out, a little bit faster and already get a new high. Intel, yeah, I don't know about this term, man. Maybe. Bob is also just broke 3.5 year base. JD is lagging. What I made for Oracle, that's a digest versus what? There's no setup in Oracle. This is like capitulation value to the upside. Usually when you get this kind of thing, it's like literally the heaviest volume that you'll find in the entirety of the last 2-3 years. Right, it dwarfs even what look like these big red candles or big green candles or whatever the hell they were. It dwarfs them after a huge move. You need a whole new base in Oracle before I would even consider it. Data finally waking up, yeah. Yeah, nice job for data. Huge move, man. Very nice. It depends. It depends how the market's acting. If the market's acting well and the stock is showing big volume when I pull it up and it's breaking over my, the prior high, then I take it right away. I thought on Joby, I saw the perk up this morning, but it needs to get back over to the 50 day. I think Palantir looks fine. Chipotle looks like shit. RCL is mine. I own CCL already, so I really only own 2 of these 3 stocks. No position in Corby. Where's the setup? Where's the setup in Corby? Why would I have a position here? Was I supposed to guess that this was the bottom? Or maybe I guessed that this was the bottom and then it just failed? Or guess that this is the bottom and maybe it fails? RW looks fine. It looks just like ARKK. Yeah, that's what you want to be looking for, right? Yeah, that's the kind of stuff you want to be looking for against daily levels. So you and I don't necessarily love so much of the company, but who knows? It's kind of building a little bull flag here. Maybe we take out $15 today, it looks pretty interesting. Crowd, if it clears the 50 and crowd, else not bad. I stay larger, another one I can move with it.
Yeah, you may still below the 200. If you want it from lower, great. If you want already own it, there's nothing to do with it. So, all right, guys, I got to go time for live stream. I appreciate you guys as always. Have an awesome weekend. Thank you guys for being here and asking a bunch of great questions. Next time, I'm going to go buy a little smoother. And I'll see you guys on Monday. Trade them well today. No, I didn't catch you. Talk to you. And I'll see you guys on Monday. Enjoy your weekend. Thank you guys.
All right, guys, that is Ariel. You can find him at Real Simple Ariel on X. So let's jump into some of these and do some breakdowns, okay? So we've got a lot to work with here. It's going to be a lot of breakdowns, but in the meantime, what we want to be looking at is, man, I don't even know who to listen to that's interesting to listen to. There's not a lot going on. I guess we can listen to Amit, but I feel like this is going to cause viewership to go down. But he's the kind of guy you can listen to at 1x speed. He's like a meditative instrument. In other words, we're listening for relaxation qualities, not for content. Okay.
Let's see where money's rotating. Okay, so everything's red.
Okay. So let's get that
Except
to
Tesla,
1x speed, please.
Amazon, Microsoft,
for this
and Nvidia.
Gentleman.
Pretty much everything else is red.
And
Industrials are red, defensives are
on some
red, healthcare is red,
breakdowns here.
financials are red.
Okay.
Energy's up a little bit
There
on the
we
day.
go.
Lilly, J&J, all those are red. Well, UNH is UNH apartment that I have now because I've lived here for like 3 days in total. But yeah, I'm really sorry about the inconsistency of it. It's just these events were like very important events.
I can't do it, guys. I can't. I'm sorry.
Pecan or Robinhood.
I can't do it. It's just too content poor. I'm sorry. I guess we can listen to Felix. That would be okay. Okay. This will be fine. Just give him a second.
Watching from the sidelines, a bit like Winston,
Okay.
hide himself.
Where do we start? All right.
If you're sitting on the sidelines while the Fed cuts interest rates, what I'm about to show you could be the difference between massive gains and, well, watching from the sidelines, a bit like Winston back there, who's doing his best to hide himself
Pretty
under that
perfect.
table. Rate cuts are creating the biggest opportunity in growth stocks we've seen since 2020. And while most retail investors are confused about what to buy, I'm going all in on 8 specific high growth names across 5 red hot sectors. And by the end of this video, you know exactly which stocks I'm buying and at what levels and why each sector is the one that I'm looking at. I'm Felix Preen, ex-investment banker. There is a Winston back there, and I've seen what banks do from the inside. And I've since founded the GOAT Academy with over 20,000 students. I'm also the co-founder of TradeVision.io. And I've dedicated my retirement to teaching regular investors how to beat Wall Street out. And today, I'm going to give you 8 stocks across 5 sectors that could deliver massive returns as rate cuts fuel the next bull market, but only if you buy them at the right level. Now, this is not financial advice, so these are picks based on my strategy And my rules, and these are rules that I nicked from Wall Street, quite frank with you. People have been using these rules in a similar fashion for about 50 years. Big trading houses use them. And all I'm saying to you is you got to do your own research. You got to understand how this works. You got to learn the rules. And I'm going to give you
not financial advice,
way more information
these
and
are
golden
picks
nuggets
based
than
on
anybody ever has done on a YouTube video.
And
so
my
stick
rules.
around.
And these
now,
are rules that
we're
I
looking
nicked
at
from Wall Street,
five
frank with you.
sectors.
People have been using these rules.
And just
in a similar
briefly,
fashion
why
for
are
about
we
50
bullish on
years.
these? We're looking at building products
trading houses use
particularly.
them.
And Fed rate cuts
Sorry
are
about
a
that.
boon to building
I'll be gone in a
generally
second.
because lower interest rates is cheaper to build. There's also a massive housing shortage and generally infrastructure spending coming out. Gold rate cuts are bullish for gold. The whole geopolitical tension and so on, we get a bit more detail on that, is also bullish. And then April, which is just you going shopping or the wife going shopping, that's called consumer recovery. And people are also just spending a lot more stuff online, obviously. We also throw in a specialty retail. That was a tip from Winston back there, wasn't it, Winston? He's like, you got to put that one in. That's a good one. That'll make more sense for you in a moment. And then we've got biotech, which is just super interest rate sensitive. We also have some really cool treatments. And I'm not giving you the crazy ass biotech stocks there. We're looking at large cap or mid cap biotech stocks. So companies that actually have revenue and exist and not just like, a shed somewhere in the middle of somewhere. So let's jump straight into it then with our first stock. And this one's called Fortune Brands Innovation. You may or may not know them. The ticker symbol is always at the top of my presentation here, FBIN. My entry points here, I'm not telling you what to buy. That's basically the note I write for myself. I'll explain more of that when we look at the chart in just a second. But they make home improvement products pretty much in every American home. They own here these Moen faucets, Master Lock, Yale Smart Locks, decking, 4.6 billion revenue across those sectors. Pretty profitable for that sector, very nice free cash flow generation, and their margins are actually improving. Now, the whole smart home and the outdoor living trends are accelerating what they're doing, so we like it for that reason. Now, I'm going to show you the stock chart. But you know what, actually, before we look at the stock chart, people always ask me, Felix, how do you find these stocks? And I always say to them, well, join my free live training coming up in a couple of days, where I'll actually teach you the full thing from back to front without the disruption of particular stocks. We just look at the education part and the rules part, and you can grab yourself a free seat for that, by the way, at felixfriends.org/training. And if you do, you walk away a lot smarter. And that takes about an hour and a half or something like that, by the way. But it's well worth it because we don't get distracted by something that's sort of, shiny. We just look at like, where do we buy? Where do we sell? What are the rules for the sectors and so on? So how do we come up with, hey, we want to buy construction materials essentially, or, home improvement products, we call it here. Well, the first thing we look at is just type, and this is in Trade Vision here, just type in construction ETF, and it'll give you two, building and construction ETF, iShares home construction ETF. Both will probably be fine. Just click on the Invesco one. And this will tell you what the sector is doing. And this will tell you, is this a sector that Wall Street is putting money into? Yes or no? Put it in the chat. Write building, yes or no. Is money flowing in there? Or does write building money or dollar symbols and money? You can do this in many ways. And what do you see? Well, you see that yellow line there that I put on the chart here. This is going to be all, I'm going to just give you everything, okay? So stick around, write notes, take screenshots, record it, download it, do whatever you need to do. This is the 50-day moving average line. And can you see that until May, that was going down, and May it bottomed out? And you might say, well, that was the point to buy because that was the bottom of the market. Yeah, but nobody knew that, right? So forget about the bottom of the market thing. And then it recovered. And if you're wondering the other way, I'm not wearing a jacket today. My aircon isn't working. It's incredibly hot in here. Throat's also a bit scratchy. So we saw a bit of a recovery here, which was nice. And then we saw a couple of gap ups. There was one here. It's a bit small. There's a gap up here. And then secondly, we went across what I believe is a purple line with these funky glasses. Everything looks a different color. That's the 150-day moving average line. Why does that matter? That's basically the investors line. Okay, that's what matters really for investors. The yellow line matters more for traders. Now, it's still important because it's still a good risk management level, but that's kind of what we're looking at here. So most of you are probably more in the investor camp, right? Are you an investor or a trader? Put it in the chat down below. Investor or trader?
Okay, guys, let's do a breakdown of AMPX right now. It's at a pretty clutch level. 8.5 is right here. That is the title of this video. And we've got quite a lot of information over here about this company, okay? So, here we go, all right? All right, stick around and we will do a little breakdown of AMPX, the battery name, where it's going to break out, if it breaks out, what level to watch. So let's do that. All right. There's one stock that is poised to break out. It is a battery name. The ticker is AMPX. This is in a hot sector. Batteries, lithium-ion batteries, are necessary for the energy grid. They're necessary for electric vehicles, and they're not an overbought sector like AI or a sector that is in the limelight right now, like gold stocks. So let's jump into AMPX and see exactly why technically it's a good buy right now. So this is the chart, and this flag looks absolutely amazing. 850 is the relevant level. And if you stick with me to the end of this video, I'll also tell you what the heck they do, why it's under the radar, why people are more interested in Tesla and gold right now, because they've already broken out. So what we want to do is find the stock that hasn't broken out, and AMPX fits the bill, in my humble opinion. In the last 30 days, this stock has been pretty compressed. You can see the after hours there, but this is the next relevant level, up around that whole $10 level. And if we zoom out to the weekly, we can see that $10 level is very important, heading back to first time it got listed in September of 2022. Okay, so there's a lot of blue skies above this level. You're getting in at a really favorable position. And if you're not a tech head, if you're not all about risk reward, if you're not about what a chart looks like as an indication of hedge fund buying activity, large family office buying activity, and you're a fundamentals guy, you're a tried and true discounted cash flow valuation, what does this company do? Can I hold it for 10 years? Fine. I've got information for you too. And this is the info. Amprius Technologies, AMPX, they're on the New York Stock Exchange. They do lithium-ion batteries. And they're not only in electric vehicles, which we talked about, they're also in hot sectors like vertical takeoff aircraft. That's electric aviation. It's the kissing cousin to electric aviation. So think about companies like Joby drones. So think about companies like KTOS, which is also setting up. And they are the picks and shovels for these companies. As NVIDIA is to Meta, AMPX is to Tesla. So do you want to buy Meta at a super inflated valuation, or do you want to buy NVIDIA? Do you want to buy Tesla, or do you want to buy AMPX? This is an $8 stock. It's inexpensive, not cheap. And this is why it is worth listening to. In Q2, 15 million. That's not a lot of money in dollar terms. However, it did increase from around 13 million estimate. They did have a net loss, but that was also an improvement from the previous quarter's net loss. This is a startup. No one is surprised by that. It is an $8 stock. Analysts have a buy on AMPX. No one is surprised by that either. That's their job. They did have some purchase orders and partnerships come through, including a collaboration with Nordic Wing to enhance drone flight endurance. That is an adjective we want to associate with lithium-ion batteries. Absolutely. So, what do we compare AMPX to? Well, how about ENVX? How about QuantumScape? And we can look at their charts as well. This is ENVX. This is not worth buying. This is QuantumScape. This, as soon as it loads, is bottoming but not breaking out. It is obvious to anyone with eyes that AMPX is the smoothest chart. Now, are there other fundamental reasons why it's the smoothest chart? Well, here are what these other companies do. They all do lithium-ion batteries, solid-state batteries, and there are some private companies as well, of course, in this space that could take market share and make the stock price of AMPX go down. However, at this exact moment, there is not a pure play competitor to AMPX that looks as strong, that is in this sector. ALB we'll take a look at as well, as far as a battery name that is publicly traded, that is in the spotlight. People talk about ALB a lot, and the trading volume is indicative of that. This is about 100 million traded per day or more. Besides those three tickers, ALB, QS, and ENVX, there's not much else. We could dive deep into the Q2 earnings, but this is not the Wall Street Journal. What we're trying to do here is make sure there is some buying interest. For that, we're looking at the chart. We're not too interested in these entry-level tier investment banks showing buy ratings. That's what they are paid to do. And as far as risk factors, this sort of selling doesn't appear to have any dampening effect on the stock, okay? Taking one more look at the chart, this was the selling, and the stock just went sideways, building for a move upward. So, final thoughts for you to take away. 850 is very important. We're very close as of the time of the recording of this video, going back to about a couple weeks ago, right here. It's really more like a month ago. 850 is the level. A couple weeks is more like $8 level. I'm giving you these specific levels because it really matters if you put 1,000 shares, 10,000 shares, whatever amount of money in this. The difference between 50 cents on those and $1 on those could be as much as 10 grand or more, depending on your portfolio size. So those are the levels until we get to that $10 level. If you are looking for more stock ideas, subscribe to this YouTube right here. If you're looking for investing ideas in general and you want to hear from a verified $9 million day trader, go to AikaidoTradingMethod.com. That's a martial art, Aikido. That's the name that is associated with this method. The link is down in the description. I will see you in the next one, and thank you for tuning in. Trade well, manage your risk, and subscribe. So that's the breakdown. Let's tune back into Felix.
Even both. You can identify us both nowadays. We don't judge people anymore for that sort of thing. I'm investor, trader, fluid. Is that the right way to put it? So we saw that little breakout there. And then let me just gonna zoom in on that for you, because that is such a textbook nugget thing to happen. So we get that little gap up here, right? That was really nice. There was a little one here too. And then the stock goes sideways. And that's actually brilliant. That's actually exactly what you want. And then all you need to do is you need to connect the highs, and you wait for the point for when it breaks out of that. And does it do it? Oh, yes, it does, right there. And that's really telling you this wasn't just some little mini recovery. Now we're really going. Now you could have, of course, bought it here. That would have been your entry point one if you really loved risk. Actually, your entry point number 1A would have been here, but that's crazy level of risk, and we don't like risk, actually. And this here would have been your 2, your sort of institutional level of investing. So what about now? Someone's going to write, it's too late, Felix. No, these kind of trends continue, in my humble opinion, and they're likely to. And actually, even the volume down here, we saw the largest volume we've seen in pretty much years, at least by volume, since we've seen it since like 2024.
Sorry, there we go.
So home building is going to make a comeback. That's my prediction, right? So now we've got that. Now we got to look at what's a good stock in the home building and construction thing. And again, you could look at what's in the ETF, look at the couple of biggest players there, look at the charts, see how they're looking. And here is a chart that I found. And I tell you why, because while the sector, are you still with me on this? And we're getting a little detailed here. While the sector is still, the sector looks like that, right? We're up here. But look at this one. This looks like this. It's hardly done a thing. So we're still at very much bottomish of the market. And that creates a glorious opportunity for us as this stock does its heartbeat thing, which is what they all do. And what are we looking for then? We're just looking to break out above those highs there. So what did I put on the presentation? I wrote 61.85 as the entry. And it's really confusing. When my mentors taught me this and they said, Felix, you want to overpay. And I'm like, I'm sorry, I don't want to overpay. I like to get stocks cheap. I don't know about you. And they're like, yeah, but how often do you lose? And I was like, oh, I see. So that would be more or less the entry point. So it's slightly above, or basically at the August 22 high, at the 5th of September high. So we want to go above that. We're going to go above where we've been. That's the entry point. So it's not a one thing to buy today. It's one thing to buy when that happens, by my rules. Doesn't mean you should run out and buy it, obviously, right? You can also follow news coverage and so on Trade Vision in here if you want. There probably isn't all that much on it, to be honest, because it's not that popular a stock. But it is one it looks like a potential beauty to me. And we go back to maybe not all the way to 2021, but let's just say, there is at least sort of 50% in this or something like that. That's kind of the way I'm looking at that. So is that helpful? Does that make some sense? We're going to go run through this a few more times. Second stock on the list is MAS, ticker symbol MAS, Masco Corporation. And they make faucets, paint, craft-made cabinets. In 50% of American home renovation products, they're the dominant brand with pricing power. And again, they've got exceptional return on equity. The profits are growing strongly, and they have a focus on higher margin products. I like that. So they're not trying to compete with whoever makes the cheapest junk. They're making brands. Consistent dividend growth, this strong cash generation. And you look at the chart here. Now, if you're wondering, why do I pick multiple stocks in a sector? I quite like splitting my nest eggs between a couple if I love a sector, because sometimes one stock doesn't do very much and another one does a lot. So it can be a good thing to do. And then we sort of double down on the ones that actually turn out to be the winner. So what's the setup here? Well, it's actually very similar, right? So the market bottomed out down here. You see that yellow line there. And then we've gone up a little bit. We're now zigzagging a little bit here. So again, we just want to break out above that level, right? We didn't quite do it as I'm recording this, but what was my entry point? It said here 76.35. So that would be, 76.35, somewhere there. Basically, it's always just slightly above where we've been. I mean, it isn't rocket science. And if you're off by a cent or two, it also doesn't matter. But you can just see where it's just above these highs here, and that's what we're looking at. We want to break out of that sector. So why aren't we just buying it right now? I'm sure someone's going to think that, like, well, I'm just going to run out and buy it right now. First of all, don't, because you've got to do your own research. You're responsible. If you want to be responsible for your winners, you're also responsible for your losers. And therefore, you need to take responsibility for your research and your setup and your risk management and your automations and all that good stuff. And I'll walk you through that in the live training we're going to do, because those are really fun and they're so impactful. So sign up for that one, felixfrancelog.com/training. What if it just does that for like the next 6 months? Well, I don't want to own the bloody thing. And I'll tell you why. Because my money will then be sitting in this and it'll return like zero. I'd rather it return a bit more than zero. So that's why we don't want to be in this. Now, if it starts breaking out above this, the likelihood is that it'll continue to do that. And then it might do that. And then it might go higher, right? So while patience is a good thing, entry points are very, very important, if you ask me. Now, we've got another one. We're going all in on the whole home improvement thing, right? Pink Panther Insulation Company. Ticker symbol is OC, Owens Corning. They make insulation for walls, shingles for roofs, residential doors. The leading position in energy-efficient building materials, which is a thing nowadays. Decent margins. They bought doors, 2024. Very strong pricing power. And yeah, the whole energy efficient thing is a thing. I don't think that's going to go away either. So let's have a look at that stock chart together. And isn't she a beauty? It's like a textbook. So stocks come down a lot from wherever it was. It was up here in the 200. It's 25% below that. And it's basically been doing absolutely nothing at all since March, right? It's just been going sideways. So we're at February levels right now. So that's saying to me, brilliant. The longer this goes on for, the happier Winston is. Why? Because the longer this goes on for, the more of the people who wanted to sell have sold, and the cleaner the slate, and the more likely that we do get that nice, big, beautiful breakout, if we do get it. I'm not guaranteeing you a big, beautiful breakout, but that's how we set it up. So where do we want to enter on this one? When I say we, I mean Winston and I. About 159 and a bit, which is just basically just slightly above the recent highs. It's about that. It's looking quite good the last few days. So yeah, to me, this looks very good. Looks another good candidate, another good construction building materials type candidate. Now, we're going to switch sectors here. Why are we switching sectors? Because we're looking at something shinier. Now, first of all, you might be wondering, Felix, why the heck gold? Okay, gold is trading at record levels, right? Record gold prices, 2,600 something or other. Lower interest rates typically mean higher gold prices. Why is that? Because gold doesn't actually pay you anything, right? You hold it, you hope for appreciation. Whereas if rates are really high, say I can get 5% in bonds, then if I'm holding gold, I'm thinking, well, I'd like to get the 5%. Why don't I sell some gold and buy some bonds? But when the rates come down, that kind of opportunity cost goes away. We also have central banks buying more gold than ever, allegedly to fill the empty holds that got pillaged previously. That's, of course, not true because central bankers are honest people. We also have massive ETF inflows. So if all you lot are buying those gold ETFs, well, those ETFs actually have to buy gold. We've had 5 months in a row now of money inflow into these gold ETFs. So if we look again at the sector, there's different ways of looking at that, but just type in gold ETF, at the top here, and you'll come up with a couple. Yeah, something like this will do the trick. Gold ETF, ounce, it's called. And what can you see? Well, it's going up, all right? It's going up a lot. But there is this whole period here, and I've been bullish on gold since March or something like that, if you've been following me. But there's this whole period here where we just didn't do anything. And we just did a little heartbeat thing. That's what I was saying. You don't want to be too early on these things. So what have we done now? We've broken out of it, right? It's like, yay, we're broken out of it. Amazing, exciting. Let's get some. That's basically the rationale. So we look at the sector. And then we look at, well, okay, we could just buy gold. I mean, there's an ETF called GLD. You could just buy that. But how much money does that make? Well, it just tracks the gold price. So say from March, when things sort of got a little bit moving here, on the February low, 28th of February, to right now, we're up, 27%, right? Let's hold the screen. Well, what about some of the gold miners? What about something like Groy? See the same comparison point here. 28th of February, that was here. You get the idea? It's 183% up. Which one would you rather be in? The one that's 28% up or the one that's 183% up? Right? So, yes, I don't buy gold. Actually, I buy physical gold, some, but, leave it in a great big vault somewhere. One day I'm hoping I'll be able to swim in it. But don't you just love those cartoons, those old Scrooge McDuck jumping into his gold thing? That was always my motivation in life, just why I became a banker. But we got something that's a little bit less, well, this one's obviously run up a lot. So this is a little late, right? Now, we don't want to be really late. So here is another one. This one's called AU, Anglo Ashanti. Where are they based? Anglo Gold Ashanti PLC. It sounds very British, doesn't it? Well, the Ashanti part sounds more Indian, but you know what I mean. So from 28th of February, this thing is also up 124%. But we're still liking it. Why? Well, it's breaking out very, very strongly, very, very nicely. And look at the volume here on the way it's going up. So to me, this still looks good. Yeah, it's a little bit of a chasing entry, but long term, I'm very bullish on gold. So is this the right time to buy it? Well, first of all, you might want to ask, what do they actually do? Well, they dig gold out of the ground and they sell it. That's the business model. One of the largest gold mining companies, 11 mines in 3 continents. Where are those mines? They're in Ghana, in Tanzania, in Guinea, and Argentina, Brazil, and Australia. So they're kind of a global gold digger. And how do they make money? Well, it's a fairly simple concept, really. Dig, process, sell. That's it. So when gold prices go up, their profits become humongous, right? Because the costs are the same. The digging part, the processing part, the selling part, all costs about the same. So yes, the stock's up a lot, but it is a highly profitable business. 1.8 billion in net income on 7.6 billion revenue. They added some Egyptian gold to them just. Pharaoh's gold. They just got added to the Russell 3000 index, which is going to bring in some institutional money coming in. So we like it as a play. Now there's another one, and I mentioned this one, I think a week ago in a video, but I thought I'd throw it in here again. This is DC Gold. So I had to get one of these. Someone was stuck and making a racket. Where you? This is Tabitha, our chief gold researcher. This is how much financial advice this is. Kittens do all the research around it, don't they? Very good, actually, kittens. Make very good gold, commodity traders. And what have we just seen? Well, if you're observant, there's a little gap there. Now, a gap up is always a very, very, very good thing. So we like Dakota Gold for that reason. What do? Well, they're trying to do something a bit extraordinary. If you are in the US, South Dakota used to be gold diggers' territory, sort of Wild West gold rush type stuff, and they're trying to bring that back. So there is a mine or an area here which is called Homestake. Oh, that's charmingly named, and lots of women are walking around with long blowing dresses and flowers in their hair and that sort of thing, whistling happily. Actually, maybe whistling isn't very ladylike, but you get the idea. It's been the most productive gold mine for 145 years. Dakota Gold believe there is a massive amount of gold left if you use modern extraction methods. So these guys are in the exploration stage. So exploration means we're hoping to find stuff. They're not producing gold, but they're drilling. They're putting up resources. But one reason I like them is because they have a lot of cash. So they have a strong cash position. I can't remember what it was, 45 million or something like that. And
Whoops.
they've got, Their feasibility studies and so on look good. Now, you never know whether there's anything there until you actually got it on the ground, but this is one of those things. So again, it's just running up with the whole gold thing altogether. If you might be wondering, well, I'm not going to hold that one forever. Well, we're going to talk about the forever bit in a second, because that's something we need to fix in everybody's minds, right? Now, the next stock, which is called Wheaton Precious Metals, ticker symbol WPM. You see how the pattern is almost exactly the same? So it almost matches exactly the same, because the sectors do move together. So you don't need to buy them all. But yeah, we're liking this one. It's just broken out exactly where we wanted it to break out. And, well, they're basically Netflix. But Netflix for gold mining. And that might need some explaining. Instead of owning mines, so they don't own no mines, right? No mining whatsoever. And what they do instead, they finance miners for a cut off the production at a discounted price. Really extraordinary stuff as a business model. It's sort of like gun to your head financing for mining businesses. So they say let me give you an example. They say they give you $100 million to a miner, to a mining company. And in return, the miner gives them 20% of production for 20 years. If you heard some screaming and crying, I've got cats, if you hadn't realized by now. And they might be able to buy that gold at $400 an ounce. Now, the gold price right now is not $400. The gold price right now is something like $2,600. So this is a very, very profitable venture if they get some gold out of the ground. So they're kind of like the landlord for, mining. And it makes them these extraordinary 70% margins, because it's just such a great, brilliant business model, right? No mining headaches, no environmental risks, no operational issues, no dust, no dirty feet.
Okay, guys, enough about gold. This is WPM. It's definitely on a tear, but I do believe it has already broken out to some extent. And what we want to find are stocks that are breaking out. It's an important difference, subtle difference there. And I think Rocket Lab fits the bill, particularly if it can get above. Well, let's jump into a breakdown right now, because I think this one is worth looking at. Okay. I am curious. Joby is the main connection to Rocket Lab, so I'll pull that up here. But yeah, Rocket Lab definitely looks better. It's tough to say that you want to buy it for 10 years, but there are certainly cases where it's a good buy. And I think the chart indicates that without us diving too deeply into fundamentally why this is the right buy. So let's jump into a breakdown here and pull up a bit of a closer view on the chart itself, and also on what the heck is going on here, because I'm pretty sure there's a reason for why Rocket Lab is going up. Not just the technicals. All right. So let's do a breakdown. Stick around, and we will check in on that one. Okay. Just saying hi to someone in the chat on YouTube, and here we go. There's one stock that is very close to its breakout level. It is a space stock. It's not SpaceX. It does have a ton of room for growth. I'll tell you the ticker right now. It's RKLB, Rocket Lab. And I think based on the chart and based on the fundamentals that we dive into, you're going to agree that this is the stock to focus on right now. Let's take a look at the chart. This is what is forming, building up right now. Just recently had Q2 earnings and held on those Q2 earnings, which is a good sign. A lot of companies did not hold after Q2 earnings this season. So this is the level right here. $51 is pretty important. $53.50 is the next level, and those are important numbers to keep abreast of. If we zoom way out, there's nothing at all going back all the way to 2021. That was the last time the stock had a big run, up until last September. So this is the time. The last 18 months have been huge for Rocket Lab. And now we're looking like there's another time to jump in. Back here, it would have been somewhere around October, and then this breakout happened in June. But even these times here, this was not perfectly easy. It did come back slightly after earnings. And here in June, this was not perfectly easy either. It did test a couple times before going. So that's why I'm giving you these levels. And if $51, if $53.50 gets broken, and you are keeping a watch on your position, you have a very, very big opportunity for a high reward, low risk opportunity into the 60s and beyond. So that's the fundamental reason I'm talking about it. If you're interested in the fundamentals, I don't blame you. I generally lead with the technicals, because what the technicals often do is tell us what is happening, not what's theoretically going to happen. But I do respect that there are reasons that a stock is going up. So let's look at some information about Rocket Lab. Let's see what other tickers are similar to Rocket Lab. And the one that is often talked about is Joby Aviation. And this is what Joby looks like right now. Not as good a performance after Q2 earnings, which is why the focus is on Rocket Lab right now. And let's take a look at what that earnings was that kept Rocket Lab up. Well, 150 million, which is up almost 40% year over year. They did have a loss, but they did beat the estimate, which was, well, actually, they did not beat the estimate. But I think the big deal here is this 144 million. This is certainly a growth stock opportunity. It is a publicly traded startup per se, and revenue beat the forecast. This is the bottom line. I believe it is similar to their guidance for the next quarter. So that's promising as far as how the earnings are going to go for Q3. And they do have this acquisition of a payload company. They are a space company, so this is in the right arena. This is a large number, 275 million. But they also have a lot of money coming in terms of contracts. So it's a big deal to be a company with hundreds of millions of revenue that also is getting government contracts. There's a lot of opportunity in this space because SpaceX got adopted by the government as its primary space launch producer. And so there's interest in seeing who is going to be the next SpaceX. And Rocket Lab is fitting the bill so far. This is a major caveat. They are focusing on reusable rockets. That was a huge moment for SpaceX. So the stock's up a ton. And I think this movement in the stock is based on the absolute monster performance-wise that SpaceX has been. There's not a way to publicly buy SpaceX, but there was a vehicle, DXYZ, that had a ton of euphoria when it first came out back in the first part of 2024 last year, and again about a year later, a little less than a year later. Has that price stayed up? No. But am I saying you want to own Rocket Lab for the next year? I'm not saying that. What we do on this channel is we look for stocks that have a good opportunity in the next month, few months, maybe 6 months, and occasionally a full year or more where you get those capital gains benefits. So if that's where you're looking for in terms of opportunity, I believe Rocket Lab fits the bill. And this base provides a great way to get in, risk very little, and possibly have a big move to the upside. Now, we talked about Joby. There is some positives as far as buying Joby over Rocket Lab. Again, the charts don't bear that out. The charts say that Rocket Lab has more buying interest right now from smart money, from big money. But Joby is showing signs of strong competition, and we often compare the two because they're both in next-gen transportation, okay? Vertical takeoff aircraft as well as rocket launches, and as we touched on above, Rocket Lab is working on a reusable rocket. So it is in the same breath as SpaceX, and that's why there's so much demand for this stock, because there's no way to buy SpaceX publicly besides the DXYZ investment holding company. Now, there are a couple of other tickers that are related. Of course, there are risks. But again, if SpaceX could deal with regulatory issues, Rocket Lab can deal with it. SpaceX paved the way. I wouldn't say that you want to invest in these other companies that are in the same category as Rocket Lab, but you do want to keep an eye on VSAT. They are definitely going to be in the same discussions with NASA. And so if NASA is warm to VSAT, if VSAT continues to grow and show stock price growth like it has, Rocket Lab's going to follow. VSAT is at an okay spot. It is above the 200-day moving average. And it is holding levels from after earnings, so it had a great run. But if we zoom out a little bit and say, okay, it's above the 200-day moving average by 150%, then we start to say, is there a better way to buy a space company that isn't so overbought? And the answer, I think, is Rocket Lab, which is up about 75%, so about half as extended. So that's the argument for Rocket Lab. There is a tight risk-reward opportunity. You do have to be careful with any stock that's up a lot from the 200-day. I use the 200-day because it's used by funds, whether they be quant funds, whether they be technical funds that don't involve computerized buying. The more people look at a certain indicator, the more it is self-fulfilling. So with all that said, this is the stock. The reason is SpaceX isn't investable, and the time to buy is now, and the levels are $51 and $54. If you like analysis like this, hit that subscribe button so that you get notified on future stock ideas. If you want to get more help with stocks from a verified $9 million day trader, go to AikaidoTradingMethod.com. That link is down in the description. Aikido is a martial art where you use your opponent's strength against them. I hope you liked the video. I hope you manage your own risk. This is not financial advice. I do hope to see you again for more stock ideas. Take care. Let's tune into Felix, see what else he has to say about gold.
40% production growth by 2029 is what they're putting out there. Debt-free, which is also marvelous. 1.1 million cash position and multiple new projects coming online over the next 2 years. So it's a pure leverage to metal prices. The more gold goes up, the more money these guys make. And therefore, it's literally like a leverage play on gold, essentially. So it's an interesting one if you like a little bit more risk in your gold exposure. Now, next on our list, we're looking at retail. Retail, really? Consumer spending? Yeah, it's stabilizing. Inflation is going to hopefully calm down. That should help. And then e-commerce is it's like 48% of fashion retail now. It's extraordinary. So the whole AI personalization is going to improve margins, right? Because what's the headache for a retail shop? They've got old shirts in the back in the wrong size. I walk in and I want a medium and they've only got, extra large, or they've only got them in green and purple and I only like buying blue shirts. So, that sort of thing. So with AI, you'll be able to customize this much more. You will actually know who your customers are. You will know this guy who walks in and you only buys blue shirts in the same color. So why not order some more shirts in the same color? Or when you have them in stock, why not ping him? Send him a coupon or something, right? And AI will be able to do all of that, but obviously sales assistants seem unable to. So let me give you two stocks in here, I think. The first is Land's End. Ticker symbol is LE. They make, polos, khaki sweaters, sort of stuff that, you might see me in. But it's a uniform business. And they serve schools and companies nationwide. So it's actually a B2B business, no consumer involved, right? And maybe you remember those catalogs from back in the days when people were wearing, sweaters on boats, that sort of thing. That's Land's End, classic American casual clothing. and the catalogs went out of the window, and they became online. So they now have a huge business selling those uniforms to schools and companies. That's their outfit as part of it. They target essentially, suburban parents, teachers, professionals who want quality, comfortable clothes that last. That's their tagline, apparently. Not like super trendy or fashionable, just, that kind of stuff. Now, margins are expanding, which is pretty good. They're buying back their own stocks, but just basically returning money to shareholders. And their licensing partnerships are growing as well. And the digital transformation is paying off. Isn't it funny? It's 2025 and people are still talking about the digital transformation. We kind of thought that happened in the 90s, but it didn't in retail. So it's an interesting one. Now, the ticker symbol, LE, and what do you see? You're starting to see a familiar pattern, aren't you? You see a no stability. Yes, right? That's kind of what we're seeing. And we give you one more golden nugget here. And that's that extra purple line there, the 150. When you're above that, that starts to become a very, very good thing as an investor. And we're now nearing here the October 2024 highs on some pretty decent volume after earnings. Even though the headline numbers didn't look very good, obviously what they said looked good. And you could listen to the earnings call, or you could just look at the stock chart. That will tell you the whole story, right? Because the money always tells you the whole story. So we're liking this one. The second one we're looking, which is a little prettier, is Victoria's Secret. Now, Victoria's Secret, show you the chart for it. Here we go. Lingerie, that's probably what you know them for. Intimate apparels. They are reinventing themselves. They're coming out as, they identify as dogs or something. No, I'm just joking. They had a bit of an issue as part of this whole, Me Too, that sort of thing, and they're only putting up these very skinny models and so on. It wasn't really like what everybody was looking for, and maybe they wanted to sort of whitewash themselves a little bit. So they're now an inclusive, body positive positioning. I don't actually know what that means. What is body positive? But more importantly, from our point of view as investors, they're expanding into beauty, loungewear, and activewear. And that's cool. So they've raised their sales guidance. It's a turnaround story, by the way. They had a bit of a tough time of late. Because the whole angel supermodel thing, people apparently didn't like that because, I don't know, they're too young or too female or too, I don't know what. So plus sizes are now there. They have the Adore Me program. That's apparently body positive. You would think putting fit, healthy people out would be body positive. I think the Victoria's Secret models were an absurdly athletic, skinny lot, which isn't achievable by normal people unless you want to live in a shell suit on a treadmill. But I think we're going a little bit too far. But anyway, not really for me to judge. The beauty segment is growing at 10%, which is good. And it's now, here we go, 18% of revenue. And that's pretty good. Raised full year guidance. So the transformation is apparently working. International expansion is up 21%. And some of that new stuff that they're putting out is apparently working. And if you look at this stock chart here, what a hideous stock chart this is. So this is a company that draw, 70%. Buy and hold, they say. We're going to get onto the holding thing as well in a moment. And then what happened here? Well, what happened is a genuinely beautiful consolidation pattern. Now, I don't buy the consolidation because this could go on forever and then collapse some more. So we wait for it to break out of the consolidation, break out of the highs. And has it just done that? Absolutely, hallelujah, it has, right? It's a skinny dollar symbol there. That might be offensive to some of you. I will draw a fatter one. There we go. Ozempic dollar and Adore Me dollar. So yeah, that's why. It's a turnaround play. It's above the 150-day moving average line. It's above the 50-day moving average line, which is starting to slope up. Volume was huge along this whole sector here. Right? Look at the volume. Normally they're trading down here in terms of volume, and it's now like way more, which means loads of people sold, and that's good for us. And now they're obviously starting to accumulate slowly and quietly. So I'm liking this one. I'm liking this one. So doesn't mean you need to buy it, but I'm liking it. And then, of course, Winston's favorite. Where is Winston? Winston, you want to explain why Chewy made it onto the list? He says, I've done all my hard work for the day. I'm now sleeping. All right, Chewy, what do they do? They're basically Amazon of pet supplies, which is weird because I would have thought Amazon would have killed the Amazon of pet supplies, but Bezos, the almighty, hasn't gotten there yet. Didn't he? What was that dog food company he gobbled up? Dog.com or something? Anyway, 70% revenue from auto ship subscriptions. Do you know how big a deal that is? That means 70% of the revenue just kicks in automatically because people just keep buying the same stuff for their dogs. Winston is against that. He likes a variety of snacks and treats and food. I actually think it's best to make your own food if you can, but that's another story. But yeah, pet owners never stop spending. We're obsessed. Dog food, cat litters, toys, medications, treats, all sorts of stuff. Caviar, and actually he eats quail. So those little sort of mini chickens. He likes to eat the whole thing. One of his favorite treats. 21 million active pet parents. And AI-powered personalization is increasing order values, expanding into pet healthcare, vet services, which is kind of cool. I'm going to mention this and I'm going to regret this instantly, but I'm playing with something, and this is still an early thing, and it's called Winston.goatacademy.org, and it's a chatbot that I've trained with alternative health information. So if one of my kittens has a conjunctivitis, what do you call it? Infected eye. So of course you could just give her antibiotics, but the poor thing is little and I don't like antibiotics. So we're cleaning her eye with green tea, for example, and it's doing a marvelous thing. We're also giving her some colloidal silver drops, which is also working marvelously. So if you're into that sort of thing, test this with me. There is it's out, it's live, winston.codeacademy.org. Thankfully, I put this in near the end of the video, otherwise you'll all be using it, and I'm terrified it's going to completely crash and burn. If you hate it, let me know, please, and I will make amends. But it's an early version, essentially. But I think it's got some pretty cool information in there already. So very excited to kind of put this out a bit more, because it's just one of those things I strongly believe in, and we might turn it into an app or something down the road. I think there's a paywall in front of this at the moment. $15 or something. Let me know if you hate it, and I will make you whole again. I think there's a free trial, I think. I hope the cancellation works. Otherwise, we're going to create some admin for ourselves. But I'm a big believer in just make stuff, check it out there and get some feedback, and then we'll make it better. But I think I've tested, I've tried it. Like Winston had an upset stomach, for example, and I talked to it and it gave me some very good feedback. So let me know. I hope that gives you guys some value. And this is not just for dogs, this is also for cats. We haven't sort of done rabbits or anything yet, but it's probably fairly similar. Now, I'm going to give you one more, and this is biotech. Now, why the heck biotech? Because biotech is the one thing that really, really, really benefits from lower interest rates. So if you zoom out a little bit on biotech, it really hasn't done a lot. 2021, it was, twice the price levels. So it's really, really not done a great deal. And it isn't just the lower interest rates that are driving this. And I'm not going to give you one of these crazy biotech stocks. I'm going to give you one that's a bit more reasonable. Lower rates, older people, right? I put 2 L's in older, just for good measure. And AI is making drug discovery cheaper. And then we also have mergers and acquisitions are picking up again as interest rates come down. So
I don't want to take too much biotech financial advice. There is some risk there. What I do want to do is keep an eye on quantum, because IONQ already went, and QBTS looks pretty strong. definitely in an interesting position. So and check in on that in just a bit, and we'll see what else Felix has to say.
So we're liking the whole sector. Now, the one I picked out for you is a large company, ish, mid-size probably, but most of these biotech companies have zero revenue. So they turn daily injections into weekly treatments. They're approved for rare disease drugs of $1 billion market potential. So they've created a breakthrough drug delivery technology. It's called Transcon, which is a really odd name for a product. But there we go. It's called Transcon. And it's a time release mechanism that makes drugs work longer in your body. So what's the problem they solve? Most drugs need daily injections. Not a lot of fun, right? So the technology turns daily injections into weekly injections, which makes life a lot easier for people with chronic conditions. So they have an approved drug, which is called Skytrofa. I mean, who runs this company? Some like Russian guy who wanted to be in James Bond probably, right? Anyway, that's a growth hormone for kids who aren't growing properly. I'm not judging these drugs or whether we should use them. But there is also your Vipath, which also sounds like a Russian drug. This is for people with parathyroid glands that don't work. There are got a bunch of other drugs in late-stage trials for rare diseases, and each successful drug could be worth literally billions because maybe I need something for that lisp. Now the lisp people are offended. I can't stop doing it now. It's silly. Anyway, rare disease treatment gives you premium pricing. Why do rare diseases pay so much? Well, if you're the only company with a treatment for a rare condition affecting, say, 50,000 people, you can probably charge those 50,000 people like $200,000 a year per patient. Incredibly unethical, but incredibly profitable. So their revenue grew 339% in the last quarter. Obviously our Russian Transcon Skytrofa people don't have much ethics. They're announcing they have multiple potential blockbuster drugs coming. The FDA is doing a priority review for CNP. Decision is coming out on November 10th. So put that in your diary if you wish. Is it November 10th? Sorry, November 30th, sorry. As a stock, yeah, it looks pretty good. It looks pretty good. It's done nothing for a long period of time since February 2022. That's a really long period of time, and it's really coming to life here. But what entry points did I put up there? 200 to 207. That can't be right. That's the wrong ticker. ASND. There we go. So it looks a little bit better, doesn't it? Yeah. So actually, no, it has actually run up a fair bit already, but it keeps doing what it's doing. So essentially, I think there's two ways to buy this. One, it pulls back to sort of 200 and you're a dip buyer, or it really breaks out above the recent highs, which is about 207. I think both are viable ways of getting into something like this. I kind of not telling you to do it. And I think, where are they from? Are they Danish? AS? It looks Danish, right? So Danish, you get free Danishes with that. I like the ones with the apricot in the middle. Is it a peach or an apricot? But yeah, let me also talk to you just briefly about the holding forever thing, right? Nothing lasts forever. That was an intentional silence. So don't hold stocks forever. Forever is a terrible time frame. People always ask.
Okay, so Danish. Let's talk about QBTS. Quantum is back in the spotlight and it just won't quit. And IONQ is already up today. QBTS looks like the next one to move. If we look at RGTI, that one is gone up already to some extent. QUBT has traditionally not moved quite as much, or at least not as smoothly. It has moved a lot but it does look like QBTS is a little more predictable, which is very important when it comes to entries and exits. So we'll give Felix a little more airtime, and then we'll do a quick breakdown of quantum stock of the day.
Ask me, what's your time frame for holding it? When the stock stops going up. Yeah, that's it. Scientific, isn't it? It is very scientific. Okay, so say this stock does what we want it to do, and it goes up beautifully, beautifully, beautifully. At some point, it's going to go going sideways, and then it's probably going to start going down. So where do we want to sell? Where do you want to sell? Well, we use stops, I call them profit locks, and we set them below recent lows. So that is where I would sell. I wouldn't do the selling, I'd automate that. If you want to learn that and the whole shebang about how we find these, then come and join me live and unadulterated at felixrenzelog.com/training. Winston will be there, probably some other cats, and we're going to have some fun, and you can ask me everything you ever wanted to know about what I learned about how to make money from money, because that's what this community is all about. I wish you all the best. Are you worried you're going to get caught out by the market crash that will inevitably come because the market moves in patterns? Well, that's what Hugh just told me to watch out for. And in all seriousness, there is actually a structure to predict the market patterns that happens with 90% accuracy.
Okay. So it's time to talk about quantum, because you definitely want to be on the right side of quantum. You don't want to give too much airtime to other sides, because I do want to give the view that is most likely to happen in the near term. And I also want to give the view that is most clearly likely. In other words, I want to pick the stock that I think is going to go up, and there's 4 of them. Okay, there's IONQ. That one already went up. There's RGTI. That one went up. And there's QQPT, which looks good, but it also is a little bit slower. Let's actually double check on that. This moves 5% on average day. My hunch is that QUBT is a little slower. It's not, okay? In the last 10 days, it's not actually. In general, the gut instinct is not the best way to invest. But there is something about QBTS that is more intriguing than QUBT. And it might be how long this is based and the fact that it still has to get above this resistance. But I think this is the correct time frame just about to look at this and compare the two. I believe QBTS is of slightly more interest right now. Okay. And it is challenging to pick one over the other, but that is what we do here. That is the entire point of what we're trying to accomplish. Okay. I'm going to do a quick breakdown here. There is a quantum computing company that is publicly traded, a quantum stock, that is about to break out, in my humble opinion. The ticker is QBTS. If you saw IONQ move already, you know that quantum is under the spotlight right now. And you want to be where the money is about to move. So let's jump into the chart and the fundamental reasons why QBTS and quantum are getting bought. So here's QBTS. Here are the levels. If we zoom in, 18 is pretty important, going back to, I would say this is about 2 weeks ago, more like a month ago. It's easy to underestimate how long this has gone sideways. This is the argument for QBTS, is that sideways motion. Because IONQ went today, RGTI started to go. QUBT is starting to build. However, and this is a very difficult call, QBTS does seem like the more probable place to put money and get a higher reward, with a very similar risk profile of $1 or $2. Now, if you don't trade technically, you want to jump into the fundamentals for these companies. And I don't blame you, because they move based on fundamentals. So let's look at those. Let's respect that the reason these are moving are for fundamental reasons. But what's most important to me right now is comparing QBTS and QUBT. And this video is on QBTS for a reason. I do think that it bears out the best technical move, and in terms of comparing the actual companies, that is too difficult to do at this time with such an early stage technology, in my opinion, as a short to medium term investor. So QUBT does have NASA contracts. QBTS does have collaborations with research institutions. These companies are very similar. I don't want to get caught up in the weeds of the engineering of integrated light technology, photonics, versus quantum annealing, mathematical approach to solving control problems. What I want to do is look at broadly why this sector is moving, and IBM is the leader, but we don't buy the leader. On this channel, we buy stocks that are likely to go up. And for that reason, we're looking at the stock that lit the fuse, the head of the snake, that's IONQ. They secured UK regulatory approval for the acquisition of a leading quantum computing startup. And these developments are important. They obviously have positively impacted investor sentiment. And now what we do as swing traders, as investors, as medium-term investors, is we look to the next company. And it has to be QBTS. If you're a fundamental investor, if you look at revenue, the revenue year over year is up 40%. It is $3 million. It's nothing that is going to be worth putting into your DCF, discounted cash flow valuation model. They are included in the quantum computing ETF made by Defiance. We know that quantum has institutional interest. None of this is fundamental in the sense of creating a model to buy QBTS based on its revenue or its investors. What we have to do is say, look, there's 4 companies to buy. 2 of them, Rigetti Computing, RGTI, and Quantum Computing Inc., QUBT, recently had hundreds of millions of dilution, okay, which is going to be helpful in the long run. That's a bit of a Freudian slip there. The long run, not the wrong run. And a third company got approval for $1 billion acquisition of a quantum computing startup. So, by process of elimination, QBTS is the company we want to buy. Okay? In my humble opinion, D-Wave Quantum Inc., as I highlight this on ChatGPT, is the company we want to buy. Can I go into details on analyst upgrades? I can't. Is that useful for you to decide if you're going to buy the stock because analysts say to buy it? No, that's not useful because that's an analyst's job, to get paid and then say to buy the stock. So that's a cursory fundamental analysis of what I believe to be the best quantum computing company to buy right now, with the clear understanding that the core reason to buy this is what the chart looks like. It is what it is. This isn't I like the stock. This is I like the chart. This is the chart. You can risk $1. There's a lot of blue skies above $22, getting up to this $27 level, which technically that's where the blue skies really are, but you can see the amount of volume that was traded up there is minimal. So there aren't going to be many bag holders selling, which means if people are making money, the stock keeps going up. So bag holders would sell if the stock gets up to the level where they were because they're suddenly break even again. There aren't many bag holders, so that's not going to have a lot of selling downward pressure on the stock. People that are buying the stock down here are going to be in the money, to say it in options language, which means they're making money, which means they're not likely to sell. When a lot of people own the stock, there's a lot of demand, and those people are making money, they are not likely to sell. That is the reasoning for Quantum. Specifically, QBTS is the stock I think is the way to go, although I just outlined a pretty clear reason why I was so conflicted with QUBT right there by mistake. But this is the one that I believe, based on prior runs, is most predictable. Okay, when you got a breakout here, you can get another breakout up at 22, and somewhere in here, I would say around 1950 is the best time to buy QBTS. We did have a comment on the good entry point for QUBT, so coincidentally, I did give that to you in this video on this live. Those are the levels for QBTS. $19, and then the whole $20 level is going to be important. And of course, on the 5-year, this is blue skies, which is why everyone's talking about Quantum. If you are living under a rock, or you have a job, which is the whole reason we talk about swing trading, is you can do it around a job. This is the stock that went earlier today. And no matter when you're seeing this video, in the next 12 hours, the next 3-4 days after the weekend, QBTS is the next mover. Thank you, SC. Let's sign off. Thank you for the comments in the live as I'm making this. If you are looking for more stock ideas, hit that subscribe button. It notifies you when I go live and when I release a new video. If you want the concise stock ideas, if you're looking to get help in a group setting with a $9 million verified day trader, go to AikaidoTradingMethod.com. That link is down in the description below. It's Aikaido, like AIKIDO. That is a martial art that uses the opponent's strength against them. Lines up a lot with trend trading or betting against the crowd. So check that out. Hit that subscribe button to see more, and I will see you in the next one. Let's see what Charlie has to say. Okay.
Folks, you better get ready. In today's video, we are going to break down the latest on the market and plays. And then we're going to break down one specific tiny stock that has extreme upside potential. is in a very booming industry and is one that you cannot overlook. We'll present the data, the evidence, and the overall case for the stock and let you be the judge. And the only thing I ask in return for all of the work that goes into making a video like this is that you hit that like button, and also don't forget to subscribe. Remember, when you do those things, YouTube goes and pushes this video out to more folks, and it helps us out tremendously. And as always, if you're the one taking the ultimate risk, you got to be the one doing the ultimate frisk. Always do your own frisky before you get risky. Okay, let's go ahead and start with the open short squeeze. So on August 28th, we called out open stock for its short squeeze potential at around $4.43, and as of this morning, it hit over $10.21 at highs. Absolutely beautiful. We alerted open calls on September 3rd for members, and we continue to believe in those as well, which, by the way, if you would like to join our Discord, last call for our 25% off sale ends tomorrow. First link down below. But anyways, what's going on here with open? Do we continue to expect higher highs? Well, this is a short squeeze stock, which means it can have a ton more upside, but it is also a game of hot potato. The entire equation here is really short interest times buying momentum equals squeezy McSqueezy potential. The higher the short interest and the higher the buying momentum, the higher the likelihood that the squeeze heats up further. You gotta understand that short sellers with this stock got way too greedy. They said, okay, open needs to go to zero, complete bankruptcy, and we won't quit until it goes to zero. The problem, well, it might not be the best booming McBoomy business, but the odds of it going to zero are nil. And the farther it flies away from their goal of $0, well, the more they're going to get margin called, and at least the more unrealized losses they're going to be sitting on. And as some decide to close their short positions, it usually causes prices to go up much farther, right? And much faster, putting pressure on the remaining short sellers that might decide to buy back shares as well. That being said, you got to look at the patterns. Take a look at the chart. What happens? It pumps up massively, and then it dumps, it pumps again, and then it dumps to a higher low, and it keeps going over and over again with higher and higher lows and higher highs. But what is happening during each dump period is that you're getting an affirmation of buyers at a higher level of support, a higher low. And that affirmation of buyers, once it starts going above those levels, above that support, well, they start buying in heavier, which causes the rest of the market to say, ooh, look, the short squeeze candidate is now going up to a newer cycle high and doing another momentum wave. But the key here that holds all this together, the glue, I should say, that holds all this together, is the trend dumping, breathing, and hitting a level of support and then going back up. You never want to chase these things as they're in the middle of a sprint. You want to get them when they're breathing. And you got to see affirmation. If you don't see affirmation at a support level, things can get nasty real quickly. So if you're not in the stock, you're not playing the stock right now, I would strongly consider not chasing it until you see the next dump cycle that takes it to a higher low, maybe $7, $8, holds it there, and then start showing signs of an uptrend. Why am I saying this? Well, because we don't encourage YOLO trading on this channel. The stock has already done so great, even since our first video on it. And as you need to know, this is a hot potato. I know you're thinking potato, I just want to hold this. But folks, this is a short squeeze stock. It's not a fundamental play. This is a play that you get in and you get the hell out and you run home to mama and papa. Okay, next, Oracle. We got to talk about what's going on here. So, of course, as you likely know, Oracle pumped massively on crazy earnings yesterday, added some $250 billion in value in a single day. But listen to this. This is from the Wall Street Journal. Quote, the database software company has $455 billion in outstanding contract revenue that it expects to collect for the latest quarter that ended in August 31st. Those performance obligations were up more than fourfold from the same quarter last year. And then you have articles like this that say, quote, OpenAI signs $300 billion data center pact with tech giant Oracle. And much more like this seems to be coming down the road. Okay, so what the hell? What exactly the hell does Oracle have to do with the whole AI supply chain? If you understand what's happening with Oracle, you can start to extrapolate and see what's going to happen with a lot of the other players in this space. There's a symbiotic relationship going on with almost all of the players in the AI race. And it's all being lifted up by massive demand for what they're offering. Let me map this out for you very simply. So the business flow here is that NVIDIA sells GPUs to Oracle. Oracle then uses these GPUs to build data centers, and Oracle builds a cloud service on top using these data centers. And then what happens is NVIDIA rents compute back from Oracle, OpenAI, Microsoft, xAI, Alphabet, Amazon, and a host of other big companies rents compute back from Oracle. What does this show? Well, it shows how AI demand is so damn strong that even competitors are cooperating together and pumping each other up, so to speak. The business is like a circle. Tons of money comes in, CapEx CapEx. They sell to each other, they rent back to each other. It just keeps circling and circling and circling. Of course, NVIDIA and their GPUs are in the middle of this, but everybody around NVIDIA is also benefiting quite a lot. In this case, NVIDIA supplies the GPUs, Oracle builds the data centers, and then NVIDIA comes back to rent capacity to sell AI cloud services. And all the other companies also rush to get compute. It's a feedback loop where many companies profit from the same scarce NVIDIA GPUs multiple times over. Charlie, this all sounds like a big pyramid scheme and a big Ponzi scheme, or at least a bubbly McBubble. How can this spending continue? Well, here's the thing, folks. You got to keep in mind that companies that are investing massively into AI compute are already seeing huge returns. Just look at this one example reported from CNBC. Google has eliminated 35% of managers overseeing small teams in the past year, exec says. So if this is what they're already seeing at the early innings of AI, why would they not invest billions of dollars more? Why would they not invest trillions of dollars more to make sure that 5-10 years down the road, they're dominating everything and getting the most of the efficiency possible? The fact of the matter is it's do or die. If these companies have the money to invest in AI compute, they will do it. If they don't, somebody else will. And that's what's pumping markets so much right now. And so how do you position yourself appropriately? Well, obviously, we've talked about all these companies for years, whether it's NVIDIA, Palantir, AMD, Broadcom, Taiwan Semiconductor, and so forth. But one of the areas that I'm specifically very excited about is the small AI data center plays, the ones that have a lot of these scarce chips in their infrastructure and are now servicing demand from these big players. And the one that I need to highlight today is Applied Digital, APLD. So for context here, you got to know that we presented on APLD April 24th, 2025 here on this channel, and we explained why we believed it was screaming buy at $4.53. We got a lot of pushback for that, by the way, but that was at $4.53. If you're a Discord member, we also alerted call options on this stock multiple times this year too. But if you go back to our original video, we not only recovered to our predicted resistance level, but absolutely blew through it to $17.73 at highs, a 4x in share price alone, right? Absolutely beautiful. But how did we call this out so early, and how can we understand how much farther this has to climb? And when it comes to projecting how far something can run or if something's a good buy, we always like to be big on evidence. Proof, not promises. Actual evidence that something deserves our conviction. If it can't provide us with evidence, we don't have time for it. So APLD at its core is a data center play. Its business is leasing to clients that need the computing power. And in this world of scarce computing power and this massive demand wave, well, they're really in the hot seat here. So what are some factors to keep in mind that motivate APLD's trajectory? Well, long-term locked-in leases already exceed APLD's entire market cap, creating massive embedded value for shareholders. Leverage to the AI supercycle. You see, AI compute demand is supply constrained, not hype driven, supply constrained. Whoever controls megawatts of power and data center real estate becomes indispensable, and APLD is positioning itself as a direct landlord of that scarcity. This is also a REIT style business model. APLD doesn't need to win the AI model wars, and it doesn't frankly want to. It owns the land, power, and data center shells and rents them out, converting CapEx, capital expenditure, going in, flowing everywhere, and it converts that into predictable OpEx-like revenue, subscription service revenue. They're also an anchor tenant backed by NVIDIA. CoreWeave is APLD's biggest customer. It's directly backed by NVIDIA and carries a $30 billion backlog, meaning demand for APLD's capacity is validated and it's sticky. It's also worth mentioning that NVIDIA also owns a direct equity stake in APLD, further aligning incentives and reinforcing credibility. So Charlie, you speak of evidence, you speak of proof. What is the proof of APLD's trajectory in one sentence? Well, the evidence that I'm going to give you here is that APLD is turning large upfront investments into durable recurring cash flows. And it's doing that and compounding week after week, quarter after quarter, year after year. And this is so important because you have this proof of concept in an industry that's seen unprecedented exponential demand. I'm talking again about the data center industry. Now again, I like proof, not promises. There's a million other companies out there that are saying they're doing this, but they're not showing the level of proof of concept that this company is. Now people say, Charlie, I don't need proof. I don't need my stocks to show evidence of them being a good buy. I go based on feels, based on energy, Charlie. Energy needs to be right, Charlie. If the stock is a Pisces, but I'm a Libra, I ain't buying that shit. Well, folks, if that's your investing and trading style, great. But that's not what we're doing here on Zip Trader. We need to see evidence. We need to see proof of something that can give us conviction. Because without conviction, you're basically just gambling. And proof is not just a one-time thing. The bigger picture here is that we need to continue to see it show and earn our conviction. And that is in the form of APLD continuing to deliver and sign and execute more and more leases, especially with big name hyperscalers. And considering all of this reporting from Oracle and others showing massive data center demand in the overall industry, it makes sense to me that this company will keep printing. Again, it's running huge. So you want to see a dip to support. You want to see a nice pullback, 10, 20%. You can't be looking at this and say, oh, it's running now. I'm just going to buy and YOLO in and not understand what this is. And also, full disclosure, we did recently alert another round of APLD calls to Discord members. The recent calls show and explain our expiration date, how long we give it to play out, and of course, the strike price that we see as appropriate. If you're interested in seeing all of our options alerts and other alerts and price targets and so on and so forth, and having the full Zip Trader experience, the link to the Discord's down below. 25% off. This is the last call on that promotion, and that expires tomorrow. So make sure to take advantage. Have a good one, folks. We'll see you in the next video.
If you are watching right now, go ahead and hit that follow button on X, or if you're on YouTube, hit that subscribe button. I will be going live and giving stock ideas, and you will be notified. Manage your own risk. Good luck, and hope to connect with you.